Hey guys, hope everyone's doing good. So today the video is going to be a bit different. It's still going to be an ICT trade setup, but today I actually recorded the trade in live. So before putting you the trade with music, and I will speed up the trade because it took about 15 minutes and the video is going to be too long. So I sped up that to about 3 minutes. So yeah, I'll just break you down the trade and then I'll play it for you guys. And if you have anything you want to share, any comments, any suggestions, any feedback, feel free to leave a comment. Also, if you want to support me and you appreciate these videos, I would really appreciate a like and a subscribe. All right, let's get into it. So I opened my chart like usual a bit before my kill zone at 6:30, basically a bit before 7 a.m. So I identified these two liquidity price points right there, so buy side and sell side. Also on the left, I saw that there was a fair value gap here that we touched twice, but price did not make it through. So I was expecting the price to go back to that fair value gap. And then if the price does not make it through that 15-minute fair value gap, I would expect the price to go back down right here. If the price goes above that fair value gap, I was expecting the price to go up to the next liquidity price before going down. So this is what happened, and this was my bias. So obviously, as you can see, the price went above. So I was just waiting the price to climb, grab more liquidity before breaking structure. And the usual ICT break of structure, market structure shift, and FVG or order block entry. This was an order block entry, so yeah, let's go and break it down more in detail. If you go back down to the 1 minute chart, you see right here is the grab of liquidity. Then market just goes up. As it goes up, I identify my swing lows. So one thing for swing lows that you could note is try to see it as a pattern. So it's a 3-candle pattern. Your middle candle has the lowest low. On the left, you have a higher low, and on the right, you have a higher low. So this is how you can really filter out your swing lows and make sure they're valid, or instead of valid, you can also say higher probability. So I had one here, and then I saw another one here that I annotated. Then we have our market structure shift right there. You just look to the left. I saw a fair value gap here, but yeah, I didn't have time to take it because market just flew through it. This high here, then I did not expect the market to go through it because we had a market structure shift. So this is why I decided to still enter on the bearish order block right here, because I really wanted to give this trade a chance. So I entered on the bearish order block, which is basically the last candle open here before the move down. So at the start of the open of this bullish candle is where I identified my bearish order block. So yeah, entered here, stop loss above the wick of this candle to be safe. And my take profit, I took partials at this swing low right there, and I optimally aimed for the lowest liquidity right under, which is here. But yeah, as you'll see on the trade replay, I decided to just cut the trade here, call it a day, because I was happy with a 3.5 risk for ratio. But as you can see, it was pretty nice. So it went back up to the order block and then shot back down to the 15-minute liquidity, which would have ended up into a 5.5 risk to reward trade right there. So yeah, pretty nice trade. So I hope this breaks it down pretty well. I'll let you guys see the trade. If you guys have any questions, feel free to leave a comment. So yeah, until next time, have a good day, guys.